When we see some of the uncertainty has been taken off the table in terms of global growth, I think, going forward, or the global economy, I should say. So between the U.S. and China, when it comes to trade, that phase one trade deal, there was some optimism in the markets when that was initially signed, or there was reports it was going to be signed. But once it actually came to fruition, we didn't really see much reaction from the markets, much reaction from investors. If we see some sort of phase two deal, one, I guess, how optimistic are you that we will get another deal with China? And then two, what do you think that means for the U.S. economy?
I'm not optimistic that we get a phase two deal this year. We're in the sort of vote harvesting season, and so it's unlikely that anything will happen. Now, that being said, I think there's a real risk around the election. I think markets kind of believe that President Trump would be the sort of market-friendly candidate, but there is a real risk that if the president does get reelected and the economy's strong, there's certainly there's good reason to think that he may well get reelected. At that point, he may become unbowed and he doesn't have the kind of threat of another election weighing on him. So, there's no saying that he'll continue to try to tighten the screws on China even more with additional tariff threats in 2021. So I do think that 2020 is sort of the calm with the China issue before a potential sort of cracking yet again, and we're kind of subject to these repeated tape bombs. So I feel like in the markets you have a lot of folks that are saying there's going to be a lot of volatility this year, and that's kind of playing out right now. But I don't really see it. I think the volatility is after the election.
All right, Neil Dutta, we have to leave it there. Thanks so much for stopping by today.